Welcome back to the channel. Today we're going to talk about something that most finance educators won't say out loud. 90% of retail traders lose money. That's not a scare tactic. That's a documented fact backed by research from financial regulators across the world. Now the question is, why? Is it bad luck? Is it the market being unfair? Or is it something else entirely? In this video, I'm going to walk you through the 5 core reasons why most traders fail, and more importantly, exactly what the top 10% do differently. By the end of this video, you'll have a clear, practical roadmap to move from the losing side to the winning side. Let's get into it. The first and most common reason traders lose money is shockingly simple. They have no plan. They open a brokerage account, fund it, and start buying stocks based on tips from friends, social media, or gut feeling. That is not trading, that is gambling. A real trading plan answers 3 questions before you place a single trade. Where will I enter? A specific price or condition, not a feeling. Where will I exit if I'm wrong? Your stop-loss level, defined in advance. And where will I take profit if I'm right? Your target, also defined in advance. Traders in the top 10% treat every trade like a business decision, not a bet. They write their plan, follow it, and review it. No exceptions. Most new traders set a target but forget to set a stop-loss. That's like driving without brakes. Even traders who have a plan often fail because of one thing: they risk too much on a single trade. Here's a scenario most traders have lived through. They have $5,000 in their account. They find a stock they're confident about. They put in $4,000. The stock drops 20%. Now they've lost $800, that's 16% of their entire account, on just one trade. The top 10% never risk more than 1 to 2% of their total capital on any single trade. On a $5,000 account, that means a maximum loss of $50 to $100 per trade. It sounds small, but this is what keeps you in the game long enough to compound your wins. They also always use a minimum risk-to-reward ratio of 1 to 2. Risk $50, target $100. Over time, even a 50% win rate becomes profitable with this discipline. Remember this: a trader who loses 50% of their account needs a 100% gain just to break even. Protecting your capital is everything. This is where most traders know what to do, but still don't do it. Emotions override logic, and the market punishes that every single time. Fear causes traders to exit winning trades too early because they're scared the profit will disappear. So they take a $30 gain instead of letting the trade reach their $100 target. Greed causes traders to hold losing trades too long, hoping the stock will come back. Instead of taking a $50 loss, they hold until it becomes a $500 loss. And then there's revenge trading. After a loss, they immediately jump back in with a bigger position to win it back. This is how accounts get wiped out in a single day. Imagine you set a stop loss at $45, but when the price hits $45, you move it to $42 thinking it will recover. That one decision is what separates consistent losers from consistent winners. The top 10% treat losses as the cost of doing business. They accept a bad trade, close it at their stop-loss, step away, and come back with a clear head. Turn on any financial news channel and you'll hear phrases like, "This stock is about to explode," or "Analysts say this is the next big thing." By the time you hear about it, the smart money has already moved. Most retail traders buy a stock after it has already run up 30 to 40% because of hype. They're not buying early, they're providing exit liquidity for the traders who got in first. The same goes for social media tips, WhatsApp groups, and anonymous stock picks. If someone is publicly sharing a secret stock tip, ask yourself, why? Why would someone give away a money-making opportunity for free? The top 10% do their own analysis. They look at the chart, check the fundamentals, understand the sector, and make an independent decision. Following tips without understanding why you're buying is one of the fastest ways to lose money in the market. The final reason, and perhaps the quietest one, is a lack of patience. Most traders want to make money fast. The market rewards those who are willing to wait. Losing traders overtrade. They feel like they need to be in a position every single day. They see a chart move and they jump in without waiting for their setup to appear. Winning traders wait. Sometimes they pass on 20 trades in a row because none of them meet their criteria. And when the right setup appears, they execute with confidence because they've done it before. Consistency also means keeping a trading journal. Every trade, wins and losses, gets recorded. Entry, exit, reason, outcome, and emotion. Over time, this journal becomes your most valuable asset because it shows you exactly where you make money and where you lose it. The top 10% don't just trade, they study their own trading. So now you know the 5 reasons most traders fail. Let me give you 5 direct steps to get to the other side. First, build a written trading plan before you place any trade, entry, stop loss, target, every time. Second, never risk more than 1 to 2% of your account on a single trade. Protect your capital above everything. Third, set your stop loss when you enter the trade and do not move it. Honor your plan. Fourth, do your own research, stop following tips, and learn to read charts so you understand exactly what you are buying and why. Fifth, start a trading journal today, track every trade, and review it every week. None of these steps are complicated. But very few traders actually do all 5 consistently, and that is exactly why they stay in the 90%. That's a wrap on today's video. If you made it this far, you already have more self-awareness than most retail traders out there, and that matters. The market is not designed to make it easy. But with the right habits, the right mindset, and the right plan, the top 10% is absolutely reachable. Be patient, be disciplined, and keep learning. If this video was useful to you, please give it a like. It genuinely helps the channel grow. Subscribe if you haven't already, and leave a comment below telling me which of these 5 reasons resonated most with you. I read every single one. See you in the next video.